Hi everyone, my name is Donna with Bookkeeping Made Simple. In this video, I'm going to show you how to become financially literate and start building wealth today. Financial literacy is something a lot of people struggle with on a daily basis. Many people want to know how to have more money, more freedom. They may have their own definitions of what real wealth is, but they don't even know where to start. So that's really why we're here. We're going to give you some tips and strategies that will help you become financially literate and start building wealth for yourself. So if you're ready to break out of the cycle of poverty and living paycheck to paycheck, let's get started. The first thing, of course, before I really get into this video is to discuss some housekeeping. If you enjoy these videos, please like, share, and subscribe. That is what we ask. If this is useful for you, share it with your friends. Don't keep all the good stuff to yourself. And so let's get started. First of all, what is financial literacy? That simply means that you know what to do with your money. You know where it's going. You know how to track it. You know what your reports mean. You know how to read a credit card statement. You understand interest rates, et cetera, et cetera. So what that looks like in a lot of people, you can take two people making, let's say, $70,000 a year. And the one who is financially literate and understands what their money is doing for them or what against them is going to be able to make decisions on how much to put on credit cards, how frequently to pay their credit cards off. This is a huge one I'm going to get into. They know how to read their reports. They know how to read their credit card statements. They know how long it's going to take their credit card to be paid off. Frequently, they have a low debt to income ratio so that they can make investments later, and they know the difference between investing and simply spending. So that really is the foundation of financial literacy. A lot of it does have to do with understanding interest and really understanding where your money goes. So if you take these two people, both making 70 grand a year, in 5 years, one could be a millionaire and the other one could still be living paycheck to paycheck, wondering why they're not getting ahead. I don't want you to be in the second group. So the very first thing to cover is to talk about budgeting. Budgeting is a spending plan. Most people don't like to do it. They consider it like dieting. Nobody likes to go on a diet because when you diet or even meal plan, you have to know in advance what you're going to eat. Okay. And I'm on a diet. I already know what I'm going to eat for every single meal of my day to day, except for the last one. And that's mostly because my husband's in charge of that. But I do know what I'm going to eat, and I know how much I'm going to eat. That's all been planned in advance. It's the same thing with your financial budget. You should know in advance where every penny of your money is going. You should know how much has to go to your credit cards, and on your credit cards, how much of that is interest? How much is going to housing? Is that rent or is it a mortgage? If it's a mortgage, how is your loan amortized? Is it an adjustable rate? Is it a fixed rate? You should know every last bit of this, not just what it is, because these big words can mean a lot of different things. And many people don't understand the concepts, but you certainly should understand what it means for your wallet, what it means for your bank account. Are you paying a lot of interest points up front? And if that's the case, do you need to stay in your house longer to be able to earn a profit on it? Okay, so that's some of the key things. You should know in advance where every penny of your money is going. And this is where most people actually do really fall down. They don't want to know. We are so lucky in the 21st century, not quite to the 23rd, because we log into our bank and we can set up these auto pays. We don't have to think about all of this stuff. Whereas, say, my parents' generation, you had to balance a checkbook. You had to know where that money was going. It didn't sneak up on you because you couldn't just swipe a card. You had to be thoughtful about it because you didn't always know how much money was available. You only knew for sure once a month. Okay. So this is where the set it and forget it idea of finance is really hurting a lot of people. They put everything on auto pay and they just, which is good. But then they don't think about it anymore, and they make decisions not based on their own financial well-being, but on whether or not they can keep up with the Joneses. So the first thing to start understanding is your budgeting, and you should include in your budget a sizable portion for savings and investing. Now I say a sizable. That could be, $20 a month if you're a college student just starting out. It could be $2,000 a month if you're coming towards the end of your career and you want to retire. It's going to depend on your goals, which goes into budgeting. You need to define those. Now, as we're talking about budgeting, there are long-term financial goals and there are short-term financial goals. Here in Utah, where I live, one of the most common ones that I hear for a short-term goal is, I want to take my family to Disneyland. Lots of people here like Disneyland. That's great. So, and for some families, they feel like that is a large, once-in-a-lifetime type of a trip. Other families can go more often, depending on, one, how important Disney is to them, and how far in advance they plan. So here's an example. When I went, I've been to Disneyland 3 times in my life. One, two, three. And partly because there's other things I enjoy doing in Southern California, and partly because my kids are grown. So I was able to take my kids and but as much as I like amusement parks, I don't like going to the same ones over and over. So I didn't worry about going more frequently. Now, my brother-in-law, who's one of my closest friends, he goes every time he gets he literally will fly down and go to Disneyland for a day and a half and come back. But he has an annual pass. He has an annual pass because he knows he will use it. If you gave me an annual pass, it would be a waste of money. So, because I just don't go that often, even if I had the means, there's other things I would rather do. I just have a different goal. So as you're thinking about what your goals are, also think about, how often do I want to do this? If you're a massive Disney person and you want to go to Disneyland every weekend, by the way, Allegiant flies down there pretty cheap. Flights are not what they used to be. They're pretty inexpensive these days. I took about a 20-year hiatus from flying for some reason. But if you've already got your annual pass and you'd like to go a lot, then all you have to do is pay for a hotel room. That cuts down on the cost. So for me, I paid for it at a premium, but I knew I was not going to go every weekend or once a month or even once a quarter. So I did not plan for that. That was not part of my goal. That would be a short-term financial goal. And that's already gotten way more complicated than I wanted it to. A long-term financial goal will be things like retirement, home ownership. And those can feel huge, especially when you're young. Retirement can seem a million years away. When you get a little older, all of a sudden it is tomorrow, or at least it feels like it. And you realize that your time is short. So set up your financial goals, meet with a financial advisor, or a wealth advisor, and I can refer one, to really get into what is important to you. Not everyone has the same goals. Not everyone has the same dreams. That's okay. With the right plan and understanding what it is that you're working for, keeping that ahead of you, you can make your plans and work to achieve them. how do you get the knowledge you need? It does seem a lot like there's a lot of, everybody has something to say about this. Everybody, there's Dave Ramsey, who's more of a minimalist, don't spend money unless you can pay for it twice. Very, very conservative financially advisor that works really well for some people. There are other advisors that will tell you to leverage your money. Again, it's going to depend on what your goals are. But the trick is going to be determine your goals and then come up with a plan to reach them. And like I said, there's a gazillion gurus and advisors and coaches and books that are about this. And talk to your financial advisor, and they can usually find you some of the resources that you're looking for. Which brings me to financial professionals. Accountants like myself, like my company, financial advisors have a huge role in advising or helping people understand their money and understand what to do with their money. So not just, we do more than just count it up. We talk with our clients about what are their goals? What are they aiming for? Now, that requires a ton of communication back and forth between the client and us. But in the end, you'll reach your goals and it'll be worth it. Now, if you're not making enough money, there's two ways to change your debt situation if debt's a problem, or if you are dropping below what you need to make to meet your bills. There's two ways to solve that. One is to cut back on your spending, and the other one is to make more money. So if you're choosing the second path, there's a lot of side hustles. This is, again, the 21st century is amazing this way. It used to be expensive to go into business. My parents started a business in the 70s, and it took them probably 2 years to get the thing set up and ready and funded and get the ad in the yellow pages. So they had to wait for the yellow pages to come out. For those of you that are young and don't remember the yellow pages, it was a phone book we had before the internet. You could look up businesses by category. So they had a pest control business. So if you looked in the yellow pages, they had a 1/4-page ad for their pest control business, but there was no point in starting business until the advertising was ready. Everything was print, so we had to wait for things to come out in print. It's not like today where we can turn our Facebook ads on and off and pause them and only run them during certain hours. And we have a lot of control over our advertising today. Back then, that wasn't the case. Everything was print, and generally people looked in the yellow pages, or they looked possibly in the newspaper. But it was all print. There was no internet. So it was expensive to get started because it was, hundreds or thousands of dollars to have these ads, and you didn't know if they were going to come back. Today, everything has changed. It's very simple and easy and inexpensive to go into business, but you still have to know what you're doing. You have to have chosen your business, what you want to do as a side gig. There's a lot of them out there now. A lot of my clients have spent time driving for DoorDash or Uber or Lyft just to make a little bit of extra money. Another one of the ways that I really, really love the internet is I can monitor my credit score. Now, I don't know about you, but my parents are great parents. I'll start off like that. They are fantastic. I absolutely love them, but they didn't ever talk about money. It was just not something at the time that anybody talked about. So they just did not discuss it. So So I never learned what a credit card really was until I was an adult. I didn't know, and by adult, I mean, I didn't learn to manage them until I was in my 30s. I didn't know how to manage them, how to use them for their best. I didn't know that there were rewards cards. I didn't know any of these things. So here I am in my 50s, actually learning really for the first time how to responsibly use a credit card. So that's part of it. There's one way to improve your credit score. Credit Karma and Experian have great, and I use these apps. They have great apps that will show you what cards you can qualify for, how they affect your credit score. And then the other thing to keep an eye on, especially if you want to buy real estate, is your debt to income ratio. Nobody ever talked to me about any of that. I had to learn that going through my accounting classes. So some ways to improve your credit ratings. If you have high balances on your credit cards, pay them down. Come up with a goal or a plan. There's a lot of different ways that debt can be structured so that you can pay it off quickly, actually shockingly quickly, and get out of debt and keep your vendors happy. One of the things that I've noticed sometimes I will have clients that we have an accounts receivable balance for. It doesn't happen very often. Most of them just pay every week or every month. But sometimes we have some that get into a hard time. Communicate with your creditors. Many times they're more than willing to work with you. They would rather work with you than risk losing your business or risk seeing you go under, because if you declare bankruptcy, they're not getting anything. But they would prefer for you to work with them. In order to do that, you have to talk to them. So those things can help you. I mean, one, track your credit score, track it very carefully. And two, again, know where your money's going before you spend it. And the final thing I really wanted to talk about was managing risk on making major financial decisions. I have been baffled over the past few years the number of homes that have been sold in the real estate market. And I'm not in real estate, but I have friends who are. They said a lot of homes were sold without an inspection, which shocked me. Also, because this is how you make sure that you at least know about any problems that could be coming up, is to have the house inspected, make sure it's thorough, make sure everything has been accounted for, that you know about any problems that are likely to happen. And then you can manage that risk. So you can do things like find a quality home warranty that will pay for built-in appliances if they go out. That'll pay for your water heater if it goes out. Or start saving for, put aside enough money for a water heater if it goes out. If you take into account the lifespan of some of these appliances, I don't know what they are, but if you assume that you're going to have 10 years on a refrigerator and you're putting aside $30 a month, you're going to be able to buy a really nice refrigerator when the time comes. So that's a lot of things. People just don't think ahead. And if you start to think ahead and you know where your money's going, you are going to be able to do really well financially in actually a shockingly short amount of time. If you're interested in finding out more, please give us a call at 801-692-0032. I'm looking forward to hearing from you. You can also always drop me a line. All of my contact information will be in the description, and I am looking forward to hearing from you soon.